I just want to pick up on what Kyle was saying before I get going about having a team. I'm in the practice of accounting. I work with finances and taxes and planning, but even as an accountant, I need a team to serve my clients. So I work with people like Andy and Bill when our clients have needs. They have money that's available to put into a retirement plan. I'm not an expert in those areas. I know a little bit, enough to be dangerous maybe, but they are part of my team. People like Kyle and his partner Erwin Riven, they are, part of the, one of the arrows in the quiver I have to serve my clients. So I believe it's very important, just like professionally, I need a team. In my personal life, and you as well should have a team, because you are experts in what you do at your clubs and with the game of golf, but there's not enough time in the day for you to gain the knowledge you need to deal with these other areas. And the key, I think, is to find people you trust, and so that when they tell you something, you can rely on that it's in your interests. Kyle, Andy, and Bill, I know if I refer a client to them, that they're going to give them good advice, that they're not going to give them advice because they're going to make a little extra money. If they're successful, yes, this is what they do for a living, but I know that they're going to give the best advice, whether it means working with the prospective client or not. I started working with Kyle and really his partner Erwin Riven 33 years ago, and I know it was 33 years ago because I can remember I started investing when my daughter was born 33 years ago. And I didn't have a lot to invest, but I believe, and I believe you guys should do this as well, that even if you don't have a lot of money, you should get your feet wet with investing. Get a feel for what it's like to be in the market and ride the ups and downs. So 33 years ago, I think I put $10,000 in 3 utility stocks that were recommended, that were put away for my daughter's college education. And 18 years later, that money had grown and really made a dent in my daughter's college tuition. And during that period of time, they do some investing for me. And when the market goes down and I'm getting nervous, one of the benefits is that they take the emotion that all of us have relating to investing when the market goes down. They take the emotion out. Either they'll call me unsolicited, hey Paul, you've seen the market's going down, this is what we think. It's not the time to sell. I have clients who call me and the market's going down, I gotta sell. And they are just so tied up in the emotion, I can't afford to lose this money. Well, until you sell it, you haven't lost it. And having advisors like them, and not just them, but anybody who you trust to take the emotion out of the situation is priceless. It keeps you from making decisions that are not in your best interest. So at some point, it's good to have a financial advisor. You don't need a lot of money, but you can just get your feet wet. You can think about retirement plans. The first place to start, I think, is with your employer's plan. If all you can afford to do is put some money into the 401k, that's a great thing to do, and you should do that. If you have situations, you should have an attorney that you can turn to talk to about things. Certainly a will that an attorney can help you and maybe put together a modest estate plan, especially if you have kids. So I was going to talk about this later, but I think it's really key to have a team and develop a team of people you trust that you can turn to. So in terms of financial literacy, which I guess is the topic today, I think that's number one. So just to give you a little bit about my background, been doing accounting a long time. Over 30 years ago, started with one of the big multinational accounting firms in New York City. After 7 years, I was never really the type to want to be one of 3,000 partners in an organization. So I left and I bought a small firm. It wasn't very big, but that made it affordable so I could have something to start. I had just had my daughter, thinking about buying a house, and I took the leap, set up my own shop, and it's been great. Got to go watch my kids play soccer and coach them and all those things that come with that. I grew up at a club in the area, very involved as I got older, was on the board for 12 years. I was a vice president, treasurer, finance chairman, golf chairman for 5 years. I was head of the search committee when we were looking for a new pro, who's still our pro. I know what it's like for guys like you who are looking to move to a new club or change, or if you're an assistant looking to become a head pro. I know that's not so easy. I also know that it's not so easy being a head pro at a club, especially in this area, having worked with a number of clubs and seeing it in my club. Everybody thinks, you're a golf pro, you get to play lots of golf, get to travel, play lots of nice golf courses, you're outdoors, sounds great. But I know most of you know very well that there's another side. If you have 200 members at your club, you got 200 bosses. You gotta please every one of them. The women may not like what you have in the shop, or you don't have their size. People want you at the club all the time. They want you available for lessons. The club has a budget as to how much they're willing to pay. The club knows that if you're not happy, there are 100 people or more who will come knocking on their door to take your place. So I appreciate your situation from both sides, having negotiated a pros contract at my club and having helped clients who are pros negotiate contracts with their club. And I think the pressures are getting worse on the clubs, and therefore the pressures on you all are getting increased as well. So I've been doing accounting and tax planning for a long time. Developed a niche working with golf pros about 6 or 7 years ago. I did it not because you guys were the most lucrative clients to have. Frankly, you're not. But I love golf. It's one of my passions. Probably is my passion. And you're all great people. You're smart. But I know that you need help to reach your financial goals. And I like being part of that process and helping you guys, and gals. How many of you own your shop? Okay, less than half, okay. So somewhat of what, and the rest of you are employees of the club? You're on a salary? Okay. So some of this is going to talk to shop owners and some will be more general. So the first thing I have here is that you need to set your goals, just like Kyle said. And the goal that we try to help our clients meet is to maximize their income from the club, get as much as possible from the club. And once they have that income, to maximize their wealth. So how do you do that? What are parts of financial literacy to do that? Well, one is if you own your shop, you need to have accurate accounting books and records. If you don't really know what's going on in your operation. It becomes tough to manage it. And frankly, when it's tough to negotiate a contract with the club, it's tough to negotiate when you don't really have accurate records as to how much you're making. Because I can tell you for sure, the club is probably gonna think you're making more than you actually are. And therefore, when it comes time to negotiate, unless you can tell them and show them that, you know, you may think I make $75,000 in the golf shop, but I'm really only making 40, you know, you're not gonna have, it's not gonna be a productive negotiation if you don't have the information. So I think you need accurate accounting books and records for one. You should have the proper structure. Maybe you're incorporated, maybe you're an unincorporated entity. Either one can work. They both each have plus and minuses depending on your situation. But I think you want to have the right structure for your business. Is it better to have a contract or not have a contract with your club? How many pros have formal contracts with their club? Okay, that's worse than I thought. There was a survey done, Met PGA survey done, 2012. 60% of pros did not have a contract with their club. 30% didn't want one, 70% did want one. So there are reasons that I think you should have a contract. The reasons are, one, it forces the club to focus on what your compensation is. It spells out all the different areas that you will be compensated for. You get a salary, maybe you get bag storage fees, range fees, maybe you get a tournament allowance, things like that. It's nice to have in writing in your contract. It protects you in case you part ways with the club. I believe a contract between a pro and the club really benefits the pro more than the club, because if you have a 3-year contract and after 2 years another opportunity is going to come up, you can be sure the club isn't going to force you to stay the extra year. Yet, if you have a 3-year contract, it's not so easy for the club to let you go in the middle of the contract. So I really think for that reason alone, termination, it's important to have a contract. If you're terminated, the contract should indicate that the club is probably going to buy out your inventory. That should be in writing. So contract doesn't really lock you in, but I think it locks in the club. So I think there's lots of upside to having a contract. I know clubs don't. Yes?
Pro I work for is an independent contractor. Is that a good thing or a bad thing?
Okay, so yeah, so that actually relates to a point I have over here. So there are different types of relationships that pros have with the club. Most are an employee of the club. Some are an employee and an independent contractor. So an employee in the tax law is somebody who is under the control of the employer. Employer sets the hours, sets the wages, provides the working area, and so forth. Independent contractor is really somebody who provides services but is in theory more independent. The compensation is negotiated. The independent contractor, not so much at a club, but in other areas, can refuse to do certain work because they're independent. So it might be a project and the independent contractor can say either, yeah, I'll do that, but this is the cost, my charge for it, or no, I'm not available that week, I can't do it. Okay, so independent is really independent, not under the control of the club. So most
Teaching
shop
and
owners-
revenue, basically?
I'm sorry?
That would be basically teaching and revenue would be the independent side?
Yeah, Yes, so usually lesson fees, I shouldn't say usually, it's done both ways at clubs. Some clubs will include lesson fees on a W-2 as part of the pro's salary, in addition to their base salary. Other clubs will pay it on a 1099 form, which is for an independent contractor. So if you're independent, you are responsible for your own taxes. If you're an employee, the club withholds taxes and pays Social Security for you. So it's always good to at least have part of your arrangement as being an employee, because not only are taxes being withheld, and it's a guaranteed salary, but an employee is entitled to benefits, health insurance, maybe group term life insurance, pension, 401k. So it's good to have at least part of your arrangement as being as an employee, but, and I think I have numbers here, again, according to the 2012 survey, 46% of pros were employees, 19 were only independent contractors, and 35 were both. So I think it's good to actually be both. You probably wouldn't be both unless you have the shop. But the good thing about being an independent contractor is it is easier to deduct certain expenses that you have. Might be travel, insurance, whatever it might be. It's tougher on a tax return to deduct those expenses if you're only an employee. Yes?
What would you think would be the income threshold of going from an independent contractor to a shop owner?
Well,
Or a business owner?
Usually the club is going to dictate whether or not they want you to own the shop. So,
Right.
I would say it's not really dependent on any particular income level. I think as much as possible, you want to be an employee of the club, especially for the 401k benefits, the health insurance benefits. Otherwise, if you're independent and you're not an employee of the club, you need these things. You have to pay for them yourselves.
Right,
So-
but where does that line cut off where it's better for you to be on your own if you have the choice?
If I had a choice, it depends whether or not I'm gonna own the shop and get the revenue that comes out of the shop, and I have to manage the shop. If club is saying, here, the shop is yours, well, I'm gonna be an independent contractor for sure. There's no choice for that portion. But I also want the club to have me as an employee so I can get the benefits.
Right.
So I don't really equate it to a line of income as to which is better. I think it's, the situation that the club is looking for you to fulfill.
Okay.
So,
Okay.
okay. I think that especially if you're a shop owner, it's important to be able to understand a financial statement. Financial statement is a balance sheet and an income statement. And I handed that out. I'll go through that with you in a little bit. But I think that's important. I think it's also important to separate your business life from your personal life. If you have a shop, you're going to have a bank account for that shop. You may have a credit card that you use to get points for buying merchandise and for travel, and that's great. But you shouldn't be paying your personal bills out of your shop bank account. And you shouldn't be using the business credit card for personal expenses. One, it confuses and makes your records harder to decipher as to how the shop is actually doing. Two, if you're audited, if the business is audited, we don't really want the IRS, and they're going to ask for your records, we don't really want them poking around in your personal financial affairs. So it's good to keep them apart. So I think part of good financial literacy is keeping your personal financial life separate from your business financial life. Financial literacy includes understanding the retirement plan options that are available to you. Time goes by very quickly. If you can start planning early, even if it's just a little bit, putting money away, 401k again that would be the first thing I would do if there are other monies available. IRAs, Roth IRAs, and if even more money is available, setting up your own defined contribution or benefit plan. That's very important. We spoke about developing a game plan. Again, that game plan would encompass planning for your retirement, for your kids' education. If there are goals you have later in life, maybe it's for traveling, maybe it's to have a second home in Florida to go in the wintertime. Those things, if you get them down in paper and you start planning ahead for them, it's that much more likely that it will happen. Knowing how to minimize taxes, I think, is part of financial literacy. This is one of the areas that we work on with our clients. And in particular, people don't really know what's deductible, what's not deductible. We're never going to take a deduction for something that we know is not deductible, but there are expenses that are sort of in a gray area. And so if we have the opportunity to take a deduction for those things, we're going to do it, as long as we can make an argument to the IRS if you get audited why we did that, and it's a reasonable argument. We want to take those deductions and reduce your taxes. Because if we don't take them, the IRS isn't going to come knocking on your door and say, by the way, you didn't take any travel deductions. Why didn't you take any travel deductions? You paid too much tax. So we want to take these deductions if there's room to do that. And some areas are deductions for a car. So if you're a pro at a club, or you work anywhere, traveling in your car between your home and your office is called commuting. That's personal. Personal expenses are never deductible. But if you go, once you're at the club, you go to play in a tournament or you go to see a vendor, that's deductible travel. So the question is, yeah.
I don't want to cut you off. I got a question on this, but I wanted to let you
Okay,
finish.
well, I'll finish the thought and then take the question. So does it make sense that a pro really should have deductions for their car? Well, I actually think it does make sense. Maybe, you're a little bit generous on the mileage that we take on the return, because unless you get audited, it's not going to be questioned, and if it is you are audited, we can at least make an argument. So, we want to take deductions like that. Maybe you have a gym membership. Well, if I go to the gym, that's personal because that has nothing to do with my profession. But I think I can make an argument that you guys need to be in good shape. You have to maintain your health. So I have no problem on a pro's tax return taking a deduction for gym membership. Again, if we get audited, maybe the auditor is going to say, yeah, I understand why you took it, but I don't think it's deductible. I'm okay with that, okay? Because if I didn't take it, I wouldn't have gotten it anyway. But probably not going to be audited, and I'm going to save some tax money by taking a gym membership. Again, I don't think that's over the line. Travel. Okay, you guys travel with your members, go, local, out of town. I think there's room to take some travel expenses, even though your home base is at your club. So you want to know about these things because, you want to minimize your taxes. You don't want to do it illegally, but if it's within the framework of the rules and working with somebody who knows work with the IRS and gone through an audit and know how auditors behave, that can save you a little bit of money. So I think that's part of financial literacy. Part of financial literacy also is knowing that if you're an employee and you get a salary, let me go back to your question about the car.
So, for a situation for a golf pro who is an employee of the club but also gets 1099 for the lesson situation,
Yep.
I'm used to taking mileage expenses for 1099s for tournament income. Would it be considered an expense of travel relating to the 1099 for my lesson income from driving from my home to work, considering that's what my 1099 was for teaching?
If you're giving the lessons at your club,
Right.
then that would not really be a business expense, because that's your place of work, that's your office.
Right.
So going from home to your office is not deductible.
Okay, I was just thinking, since it was a 1099 specifically for lesson income, you're still, as an independent contractor in that aspect of it, I would
Right.
have thought maybe
Well,
you should take travel expense there.
So when you get your 1099, it doesn't say lesson income, it just says
Miscellaneous.
how much the club paid you for as an independent contractor. You could have expenses relating to generating that income. If you win a tournament, a Met PGA tournament, they're gonna give you a 1099 for your earnings. You certainly would wanna deduct expenses for that. You wanna deduct travel to the site of the tournament, you'd wanna deduct caddy fees, maybe supplies. So, you can deduct expenses against 1099 income. Technically against lesson income, if the lessons are generated at the club, you wouldn't take them.
Got it.
Okay. Yes?
As far as caddy fees deducting, you're paying cash, you're not getting a receipt for it most of the time.
Right.
So if you get audited and you don't have a record or a receipt,
Right.
how does that work?
Right, okay. So this is what I tell my clients. If you tell me for the year you had $2,000 in caddy fees, first of all, if I don't trust you, to be honest, you're not gonna be my client. So we start there. So I tell them, if you tell me you had $2,000 in caddy fees at tournaments, I'm gonna believe you. And therefore, I know you spent it. I know it's a deductible item. The fact that you don't have receipts, what I'd say to you is, look, I know that's a good expense. I'm gonna take it on your return and deduct it. But you have to know that if you get audited and you don't have the receipts, there's a reasonable chance it's gonna be disallowed. I'm gonna take it because you told me you had it, and I believe you, and it's a good expense. But the auditor isn't gonna take my approach. They're gonna wanna see the receipts. So if you don't have it, again, I don't take it, nothing ventured, nothing gained. But if you get audited, just understand, you could get a tax bill.
If you're going to an event, and you know that that situation's gonna present itself. If you wrote yourself a check, in the mental part, just put caddy fees, Met Open, for 300, 500, whatever it was, then you paid him that 500 cash. Does
Right.
that cover you there?
That's not gonna do it, because you could have taken $500 and gone out to dinner, so, yeah, that's not really.
So if you have one caddy that you use all year long, at the end of the year, you've given him 8, 10 grand, should you 1099 your caddy?
Yes, you should.
That
That's why the IRS wants you to 1099 them,
Right.
knowing he's not gonna love it. Okay, so, all right. Okay, so if you get a 1099, you get a W-2, you have to realize that probably not all of your taxes are gonna be covered by the withholding on your salary. If you have other income that's not on your W-2, you're gonna have additional taxes to pay. So in theory, you should be making quarterly estimated tax payments to cover the additional taxes that are gonna be due on your tax return. The IRS doesn't wanna wait till you file your return to get your tax money. So either you pay it in through withholding or you pay it in through quarterly payments. Yes?
Just got a question. You got 1099.
Yep.
Now you're responsible to the taxes at the end of the year, but how do you manage the Social Security payment? Can you pay it out of that?
If you get a 1099?
Yeah.
Good question, okay. So when you're an employee,
Yeah.
your employer withholds Social Security and Medicare. Okay, they withhold it from your pay, and they match it. So they're paying 1/2 and you're paying 1/2. It's coming out of your paycheck and it's on your W-2. So when you get a 1099 form, nothing is being withheld, and the employer isn't paying in any Social Security. So what happens is on your tax return, you put it in and it goes in as self-employment income. You have to pay both halves now. You pay Social Security and Medicare tax, you pay what would have been withheld from the paycheck, and the half that your employer, if you had been an employee, would have paid. So you have to pay self-employment taxes on 1099 income, less than income. And that's 15% of the amount that's on the 1099. So in addition to income tax on that amount, on the 1099, you have to pay approximately 15% for self-employment tax.
But is it required to pay quarterly, like estimated tax and stuff? You know, I mean, 1099 is not really set amount. You know, I
Right.
don't know, I wouldn't know until
Right.
the end of the year.
Okay.
Tax season, that you know, what I did.
The IRS says that if you owe up to $1,000 with your tax return, we won't penalize you. But if you haven't paid in enough during the year through quarterly payments, estimated payments, and withholding, and you owe more than $1,000, they're gonna penalize you. There are a couple of situations where you could owe $1 million with your tax return, they won't penalize you. It's based on the taxes you paid last year. Or if you have paid in 90% of this year's taxes, they won't penalize you no matter how much you owe. But generally, if it's, they want their money during the year. Okay. So I think part of financial literacy, and Kyle spoke about this, is that you understand that if you're going to invest money, that comes with stresses. The market goes up and down, it's become more and more volatile. You just have to understand that you're doing this for the long term, hopefully. And it's just part of the territory, but the investing, especially if you're the person who's going to check your accounts on a regular basis, frequent basis, there's stresses involved in that. So there's a fellow, Ken Fisher, who's an investment guy. You hear him on the radio, and he writes a column in Forbes magazine on a regular basis. And he's written a couple of books, which I've read, and he calls investing, he calls the stock market, he called it TGH, the Great Humiliator, because if you try to do it on your own, chances are you're going to get humiliated. You're going to sell low, you're going to buy high, exactly the wrong thing to do. So, you know, so I think you should get involved in investing, but just realize that that's going to come with certain stresses that people can help you get through. Knowing when to take on debt. I'm not a debt guy at all, but when you, especially when you first become a pro at a club, you're probably going to need money to buy inventory and stock the shop. Clubs will often give you money, not give you, but loan you money that's got to be paid back. So I think you have to, you know, be aware of what it means to take on debt, take on a mortgage for your home. You have to be aware of what that means and how you're going to deal with it. I also think that if you own your shop, that it's important to know who your best customers are, who's going to spend money in your shop. It's good if you can have a way of measuring who spends how much in your shop. Your point of sale system can help you do that, because you want to cater to those customers. So I think that's part of the drill for being a pro at a club, especially if you always own a shop. So how do you become financially successful? Well, we pretty much spoke about that. It really means having part of a team. People who know or are experts in the various areas that touch your life, financial areas, and that you can call when you need to, if you have a concern or you have a question. And I think that means financial advisor, it means an attorney, hopefully it means an accountant, maybe an insurance person. If you own your own shop, it probably means maybe a merchandising person. Somebody can help you with buying and displaying and merchandising. So I think you can't, I don't think, especially with the demands on your time, become financially successful on your own. So, so one of the things I hit with my Golf Pro clients is that it's very important to know what you're really earning at the club. You have different buckets of income that probably come in. One is your salary, one is income from the shop, lesson fees, tournament fees. We're very big on this because frankly, a lot of the pros that come to us don't really know what they're earning. So to do that, you need accurate books and records. And you need that so that when it comes time, if there is such a thing as a negotiation of what your next compensation is going to be, you need to be prepared for it, and you need to have ammunition. So you need to have, again, if you own the shop, an accurate profit and loss statement. You guys probably, and gals probably all get the compensation survey request from the Met PGA. Well, that information is available, and it shows the range of compensation of pros in the area, and also shows the composition of their compensation. It's good to be able to go into a negotiation with the club, especially if you feel you're undercompensated, to be able to say, well, I know that, you know, my peers in the area, with regard to them, I'm in the bottom half. And, you know, I've shown you what I could do. And, you know, this is ammunition you can use to hopefully negotiate a better contract. Obviously, if you're at the top of the level, you're not going to use that. It also helps to understand what issues the club is dealing with. Because, as you know, today, clubs are under a little bit of stress as well. Memberships at many clubs is down. Clubs are trying to control their costs, where in the past that really wasn't an issue. The membership base isn't as broad, so they are cutting back on some of the services. They are cutting back on the head count of staff. They're having 2 people do the job that formerly was done with 3 people. And, you know, for the most part, at most clubs, your compensation, when you look at the compensation of all the employees at the club, is going to be towards the top. So they're not going to be looking to give you a lot of, increase your compensation a lot every year. And this is often a struggle. Clubs will give bonuses. Bonuses generally will be the same every year, but you know, it's important to go into any negotiation to understand what the issues the other side is dealing with. So, so I think you have to be aware of that. I want to take just real quickly, I gave you a handout. I just want to go through this briefly. Some of you may be familiar with the balance sheet and the P&L statement. I think you should have a little bit of knowledge of it, especially if you have your own shop. You should be generating these reports and understanding what they mean and going through them during the year with your accountant. You should be comparing this year to the prior year to see trends. That's important, and we use trends when we put together a negotiation plan for a pro. If the pro shop is stagnant, we want to tell the club that that's not an area where you can count on me increasing my compensation. I really need to get it from the club. So, so the first page, this is not totally mythical numbers, but some of them are. But so the first page is a balance sheet. So the thing you should know about a balance sheet is that it measures what you own and what you owe as of a point in time. So this one is as of December 31st, 2006. And basically the top half is what you own: cash, inventory, some equipment. As of December 31st, this is the value of those items. And this bottom half of the balance sheet is what you owe to people. Owe American Express a certain balance on a certain day, you have notes payable, these are the balances. And then the very bottom is, in theory, the difference between what you own, assets, and what you owe out to people. That on a personal balance sheet, that would be your net worth. So I don't want to spend too much time on the balance sheet, but I would want to spend a little bit of time on the profit and loss statement. And the reason I want to do that is I've been in a negotiation, the pro comes in with the P&L statement, looks at the bottom line. The bottom line says, well, I made only $33,000 in the shop this year. And then the club, and a lot of clubs want to see the pros P&L at the end of the year. Not all of them, but some do. So the profit and loss covers a period of time. In this case, it's a year. So income is at the top. And if we look about a third of the way down at account 4065, payroll, well, I'm sorry, yeah. Well, actually, let's look at 4070, tournament winnings. Well, that's really not part of the shop. Okay, here it says it's contributing $11,000 to the shop. Pro did that outside the shop. Okay, that's part of his income, but in showing the club how you did, you don't want this in here, okay? Especially because it's gonna make things look better than they are. So we wouldn't want that in here. Down below, account 4090 says New York State sales tax. Well, New York State sales tax isn't sales. It's tax you collect and have to pay out. So that shouldn't be here. That's making this look better than it should. Down account 4303, inventory. So you want your change in inventory to be on your profit and loss statement. But this has beginning inventory, ending inventory, and change in inventory. You don't need change in inventory because you got the beginning and ending inventory. Subtract one from the other, you get the change. So you can see that in the right-hand column for 2005, it says the inventory change was $64,000. That is throwing off this profit and loss for that year by $64,000. That shouldn't be here. This chart of accounts, which is a listing of the accounts, was not set up properly to capture what should be captured. Okay, account 6290, insurance, officer's life insurance. Again, that's a personal expense. That's not, doesn't have anything to do with the operation of the shop. Shouldn't be there. Account 6380, miscellaneous expenses. We don't ever use an account called miscellaneous expenses because nobody knows what's in there. Could be anything. So, as it happens in this particular case, miscellaneous expenses were personal expenses of the pro, had nothing to do with the operation of the shop. So that shouldn't be in here, yes?
Under 6070, bank finance and late pay charges?
Yep.
Are those referencing business credit cards or?
Yes, in this case, those are business credit cards. This opens up an area that the club could look at and you know, the pro is saying I have all these expenses, and the club could say, well, you had $1,800 in bank charges and late fees. It's not our fault you paid your bills late. You know, that's on you. So, you know, you got to remember that, you know, what's here is got to be accurate, it's got to relate to the shop. Account 6005 officer's salary. In this case, that wasn't really salary. The pro took out money, which he's entitled to do. You can take out the profit of your business. That's why you're in business. But he called it a salary. That shouldn't be here. It's not a deduction. Rent expense, $6,540. Okay, well, the club gave the pro the shop, doesn't pay any rent. So why is there rent expense here? So in this case, the pro had a home in Florida, goes down for the winter. He decided he was gonna pay himself rent. Came out of this pocket, went into this pocket, okay? That's not a deduction unless you're gonna pick up income at the same time. So that shouldn't be here. So I think you get the point. There's something called temporary expenses, account 9999. I don't know what temporary expenses are. Anyway, so while this P&L shows a $33,000 profit, when you go through all these things, you really had a $65,000 profit. So if I, as a pro, go to the club and say, I need more money, I'm only making $33,000 in the shop, then the finance chairman gets a hold of this and starts digging into it and finds out all these things. He's gonna say, you didn't make $33,000 in the shop, you made $65,000 in the shop. Pro's gonna be in a tough spot to argue for more money. I know we're about out of time. Let me just, I did have a couple other things, but I was going to talk a little bit about things to do regarding negotiating your next contract. We've spoken about some of them. Having accurate information is very important. Also realizing that as a pro going in to negotiate with the club president or the GM, and we recommend that if you can avoid negotiating with the GM, you do that. You're better with the president of the club or the golf chairman, because the GM is being measured, he or she is an employee and being measured on controlling costs and so forth. So, you know, he's not going to be looking necessarily to give you as much money as maybe you can get from club president or the golf chairman. And you have to realize when you go into these negotiations that honestly you really don't have a lot of leverage. You want to try and do as best you can. If you can't get more salary, maybe you can get an increase in range fees that are billed separately to the members and not part of dues or bag storage fees. If you can get an extra $5 or $10 for storing a bag, I think the club might be more willing to do that than increasing your compensation. So we're at 12, I think. Yep. So I'll take any questions. Yep.
Quick question, or maybe not that quick, but how do you become an independent business owner? Would you suggest doing that in our case? And also, how do you get a tax ID number, and can you use that towards more than one business?
You can get a tax ID number by going to irs.gov on the internet, and you fill out a couple of, more than a couple, but you fill out about 10 questions on the screen, and they'll give you a tax ID number right there and then. As far as about becoming a business owner, depends what you're doing, how you want to set it up. So every situation is different. It's not hard to do, whether you want to incorporate or not incorporate. Again, pluses and minuses to each. If you incorporate, got to file a separate tax return, got to keep accurate books and records for the corporation. You can have separate bank accounts, maybe a separate credit card, and you got to pay somebody like me to prepare a corporate tax return in addition to your personal tax return. If you're unincorporated, it's not a separate entity, there are no extra tax returns, but your self-employment tax might be higher if you're unincorporated than if you have a corporation.
What would be a quick difference between corporate and uncorporated?
What would be?
What would be the biggest difference between corporated and uncorporated?
In terms of?
Why would you go either way? Why would you become a corporate? Why would you incorporate it? Or why would
We
you not
have
incorporate?
clients, some incorporate, some don't. In the old days, people set up corporations to protect themselves from liability. They're worried about being sued. So somebody, that happens, they can sue the corporation. They can only go after the assets in the corporation. Today, there are things called LLCs that provide that liability protection. You don't have to be incorporated to be an LLC. So I can make an argument for either one, depending on the circumstance.
Thank you.
It's not that one is right and one's wrong. Well, thanks very much. As Donald Trump probably would say, I really love the golf course.
You're really great. Thank you, sir.
Again, just a big thank you to all three of these gentlemen, Andy, Kyle, and Paul, and a big thank you also to Kevin McGurk, the manager of Good Sunningdale, and thanks to you for coming out. Have a great day.
Thank you.
Thanks.